Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. Well, what's happening? It's been increasing over the last 50 years since it's been out there. The government has been Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto. This is your week daily morning show where we bring you the latest in Bitcoin and cryptocurrency and also geopolitical, technical, on-chain, and fundamental analysis. And in today's episode, I gotta catch my breath. Bitcoin has rallied above $21,000. It's currently trading at $21,200, and that is the highest level that it has been at in over 4 months. And when we did see these levels last, Bitcoin only stayed up here for a few days. It's really been about 6 months since Bitcoin has traded around the levels that we're currently sitting at. So again, we're sitting at $21,200, and that's extremely significant for many different reasons. But one of the main reasons is that we've completely wiped out the losses from the FTX collapse. We had a $32 billion exchange that saw about $9 billion of customer funds just disappear into the ether, and it may take years for any of those funds to get back to customers. And somehow, some way, Bitcoin has managed to rally and regain all and more of the losses than we had taken from FTX collapsing. That's a big deal. In doing this rally, Bitcoin has actually rallied above the local highs that we saw leading up to the FTX collapse. If you'll remember, Bitcoin was trading quite high. It was actually in a rally when FTX collapsed. Well, over the 2 days before FTX collapsed, it was going down. But in the era before that, or the few weeks before FTX collapsed, we were in a rally. Bitcoin's actually above that territory right now. Very interesting, and we're going to be diving into why exactly that is taking place and what that may mean for the future of Bitcoin. Is this well and truly the disbelief stage of a new bull market, like some people, such as Plan B, are saying over on Twitter? Or is this one gigantic fake out led by some massive shorting being done on OKX? I'm not exactly sure, but we are going to dive into it, and we're going to try and find out together. Really appreciate all of you tuning in. Looks like we've already got 150 people watching. Thank you guys so much. Crypto Nebs said, smash those likes for Cowboy Jebb. Thanks for opening my eyes to Lux Algo. Just wondering what confirmations you use to confirm buy-sell signals. Do you incorporate EQ Cloud? Sorry, I do incorporate the EQ Cloud. Yes, I can talk about that here for just 1 second, and then we'll jump right back into it. So basically, when I am using Lux Algo, let's go ahead and bring up Lux Algo Premium right here. When I'm looking for a trend confirmation, what I'm going to do is I'm going to use the trend catcher, which is this line right here. You can go into Lux Algo and turn trend catcher on right there. That is under the indicator overlay. I'm looking for the signal, which in this case is a strong signal, the trend catcher to be the same color, and I'm also looking to see what the market is doing in relation to a few other things. I'm looking for what the color of the candlestick is. Is it this purple, meaning it's a weak signal, or is it a really solid green or a really solid red, indicating that it is a strong signal? We're also looking to see where Bitcoin is in relation to that EQ cloud, as you were talking about just a second ago. Right now, for example, Bitcoin is above the EQ cloud. That's wonderful. That would give me more confirmation that we're in an uptrend and that this strong sell signal, this strong sell signal is accurate. I'm also going to look at the reversal zones to see which one we are closer to. We're very close to the top reversal zone right now, but we're not actually rejecting off of it and falling quickly from getting into it. We're kind of pushing up towards it. That's a wonderful thing. Last thing I'll look for is looking for the convergence of the two reversal zones. If they're really tight together, that typically means that I think a big breakout's going to come. If they're very far apart, that typically means that you are either in a major breakout or that you are just coming out of a major breakout. So yes, there are quite a few other things I look at besides just those characteristics. 1 second, just let me set that up. Yes, so I do use those. So shout out to you, Crypto Nebs. You were first. Thank you so much. Justin Eubanks in chat said, good morning, Jebb. Good morning, Justin. We got Flavio Gonzalez. I love saying your name. Said, good morning. And Justin Eubanks said fifth. I do believe you were, or maybe sixth, but you were close to the beginning. CBD Suddy said, ayo, what's up, man? We got Green Names in chat. Said, hello, everyone. Hello, Green Names. Let's see. Green Name said, morning, Jebb. Good morning. Justin Eubank said, yo, everybody. Rave Song Records said, we're ready, Jebb. Grand Roofing Incorporated in chat. Good to see you, my friend. Jojo is in chat. Silent is in chat. Crypto Mini Bike is in chat. Jebb, you ready for Jebb? What's Jebb? I'm not sure what Jebb is. Slap of the likes, mon. Yes, we're gonna go all Caribbean on you and get the like button hit. Let's see if we can't get to 150 likes before we even start. This will lead us into the beginning of our stream. Laz Martinez said 22K by end of week. Is that the case? Well, let's jump onto CoinMarketCap. Right now, Bitcoin is currently trading at $21,333. It's even moving up as we speak. It's sitting at relative and local highs. In fact, I'm going to set this level right here. I'm going to set this level right here because, as you can see, we rallied all the way up to $21,597. That is exceptionally important because that indicates, if we just turn Lux Algo off here for a second. By the way, if you don't have Lux Algo, you're missing out. Go ahead and grab it. You can get it with the link in the description box down below. The fact that we rallied up there just an hour ago means that now we have set a new local high higher than this high over here. Remember, I just set these two lines up here. This line was the local high that we set a couple of days ago. This high is the one that we just set at 21,597. We actually were still setting lower highs below the November the 5th high of 21,479. But with that wick just an hour ago, we have now actually set a higher high, and we have to go all the way back to September to find Bitcoin at this range. And you can see right after Bitcoin rallied up into this range, it flash crashed and dropped, 20% in 7 to 8 days. That very well could happen this time, but my point is that Bitcoin is rallying quite substantially right now. And the other thing to keep in mind is that it would be a little bit shocking, in my opinion, if Bitcoin did fall all the way back down to 16,300 from here, because that's a long way. Bitcoin has rallied a lot in the last 17 days. In just the last 17 to 18 days, Bitcoin has rallied over $5,000, up 33%. That is exceptionally powerful. That is a massive, massive rally. You don't see that kind of thing happening in a bear market very often. It's very rare that you're going to see a correction rally in a bear market be that large. It doesn't happen very often. If we look to our previous, especially that quickly, if we look to our previous bear market that we have as an example, we see 3 major corrective rallies, and one of them happened right after the bottom came in. We rallied 100% in 14 days. Keep in mind, that was right after Bitcoin had dropped 70% in 50 days. So we had a massive rally here because, well, it was a V-bottom. We just overcorrected to the downside and we dropped quicker than we really needed to. The trend was really something like this. We fell too far to the downside, so we overcorrected too far to the upside, and that's just kind of how it works in markets. But you don't really see that happening. Again, you see over here, we rallied 47% in 23 days. But what you also see is that it's this movement of it went up and then kind of over. You don't see kind of this parabolic, it's getting faster as it goes movement. And by the way, this market, this really took about 30 days to move 50%. Bitcoin's moving ever so slightly faster than that. Even over here, looking at this rally, 47% in 26 days. That's all well, fine, and dandy. But the thing is also, keep in mind, all of these levels were retracing up to Fibonacci levels. If we look at Fibonacci retracement here, if you'll remember back to this time, if you were watching the channel 4 years ago when we were commentating on this, you'll remember me talking about this. Bitcoin at this time was rallying up to 61.8 to 65% Fibonacci golden pocket in both of these rallies. You can see here, it did the same thing over here. We rallied to the 61.8 to 65% Fibonacci golden pocket both times, and then we rejected. That's not really what Bitcoin is doing right now. If we look at Bitcoin here, if we were to draw from this previous local high, then we're at 100%. We're at 100% retracement. We've completely made up the losses. We'd have to go all the way back here, and then you could say, okay, we're in the golden pocket. And this is something I want to keep in mind, and this is, by the way, part of the bearish paradigm right now, because it is very possible that what we should be looking at this market through the lens of is through the lens of this golden pocket retracement right here, and Bitcoin just pulled back and rallied back up into the golden pocket, and it could reject from here. That is very possible. What I'm saying is that we have not really seen the market take off like this in a bear market very much at all, because especially considering the majority of this rally was a 25% run in 5 days. You typically don't move $4,300, 25% in 5 days in the middle of a bear market. But where you do see that kind of action taking place is towards the end of a bear market in the disbelief stage after you've already had a major capitulation. In our current bear market, we saw a movement just like this, about a 50% movement. In our case, it was a little bit smaller, but we saw a massive movement of several $1,000s to the downside. This was following a technical breakout of $6,000. The more recent correction that we've had, crash that we've had, was following a fundamental correction, if you will, following the complete and total devastation of FTX, the exchange. Then what we saw happen next was the disbelief stage. We saw Bitcoin rally 33% in 8 days. This movement right here in 2019, which basically began the entire bull market in a span of just like 9 days, right here, 33% in 8 days. That is the genesis of this entire movement. Because if I just set replay right here, just look, this is what the market looked like on, what day would this be? March 29th, 2019. This doesn't look like a whole lot. This looks pretty rough. This is not great. Then you move forward just a few days. And now there's hope. Now all of a sudden this looks a lot different. Do you see the difference here? And even another thing that we were doing here is that we had broken a long-term downtrend. You see how powerful that is? We had not only had a major rally in the span of about a week or two to really set things in motion, we also broke an incredibly powerful long-term downtrend that had been a major part of market structure for months. In fact, over a year. So we move forward, and then of course Bitcoin's going to go into a massive rally because most of the bad things that were going to happen had happened. Most of the correction had taken place. Most of the people that were going to leave had left, and Bitcoin goes on about its business and goes through a massive rally. Well, now what we end up seeing happen is something similar. Bitcoin has been under long-term downtrending resistance. You can see it right here. It might even make more sense on the log chart. This trend line right here, on the linear chart rather, this trend line right here has been very powerful on Bitcoin for quite some time. In fact, we drew this trend line last year. In fact, not even just last year. This trend line was in a way sort of in place going back into the year before last, 2021. So crazy to say 2021 was the year before last. But in doing this rally, we have gone through a parabolic increase in price while also breaking long-term critical not infrastructure. That's the geopolitical side of my brain working. Breaking long-term market structure is the word I was looking for. And now Bitcoin is on its move back up. Not only that, we've also gotten above $18,500, which was that bottoming out zone, similar to what we saw in the 2018-2019 bear market. Bitcoin would go through this parabolic rise and then get back up above $6,000, which just came down below briefly. There's many parallels here that are saying that this movement could be basically this point in time back here in 2019 when the bull market was about to kick off. And keep in mind, this does not mean that Bitcoin went back to all-time high overnight. It took Bitcoin, it took Bitcoin about a year and a half to get back to all-time high through this transitionary phase where the bear market was over, accumulation phase was done, and we were starting to accumulate moving into the halving, which the halving took place right around here. This is about where the halving took place. This is within a week or two. So Bitcoin rallied, got back up above some market structure, started building VRVP support up here, traded sideways, hit the halving event, and then boom, it took off. That's what I'm saying may end up happening relatively soon, is if we're seeing a movement like this, and we're seeing sideways action, literally all I'm saying is you plot this over here, something to this effect, and maybe not that high. I'm not necessarily saying you're going to go all the way up to $48,000, but the point is something similar. We could end up going through a rally like this, gradually moving sideways, and then moving to the upside, up above $100,000 moving into the next year or two, because we are seeing very similar market dynamics to the beginning of the last bull market, and also to the beginning of the bull market before that. This looks very similar to what we saw in 2015 as well. In 2015, we had a level of support right here that we fell below. We were below long-term market structure in this downtrend right here. Eventually, we would go through a parabolic rally. Then we collapsed and dropped back and retested support, which is something that we could do this time. Then we went through another parabolic rally, got back up above that flat level of market structure, and then we blasted off. We traded more or less sideways. We were going up, but more or less sideways, moving into the halving event, which took place in 2016. Halving event took place. Boom, you get a bull market. We're looking at a very similar thing happening here. We're looking at a very similar thing happening here. Bitcoin getting above its flat level of support that used to be support, was turned into resistance because we fell below it. Now it's turning back into support. And then it is possible that we come down here and backtest the support, the downtrending level of resistance, this market structure. It's very possible that we reject from here off of this zone of resistance is very powerful. This is very powerful resistance we have above our head. You can even see it in the market. We've been having a hard time getting above it the last few days. It's possible we reject from 21.5, drop all the way down to $18,500, and we reestablish, we come back down and test this level right here. You can see that's the same trend line on both charts here. It's very possible that we reject from this horizontal level right here, this zone, I should say, basically a level, which is the local high that we saw over here. We pull back down, test one or both of these resistances, have a cup, have the handle, and then what you do is you establish an uptrending level of support right here because you have a second point of contact, and then Bitcoin has now established market structure from which it can build a rally, moving up to $30,000 by the summer. That is very possibly what's going to happen. In fact, I think there's a decent likelihood of that. My two major scenarios right now are both bullish over the next 6 months. The first one has to do with the idea that Bitcoin could just break up above here to like 25K, just smash resistance, and then come back and backtest a higher level, such as 21,000, such as another level which it has, like $22,800. Maybe we just, let me just get rid of some of these lines. Maybe we just break all the way up here. Let me just give a trend line right here, a vague trend line, something like that. Bitcoin could end up following a trend line like that. It'd have to reestablish. It'd have to establish a point of control, a pivot point right there, a set point. But maybe Bitcoin rallies all the way up to 22,800. That's the local high up here. We rally up here, pull back, back test, find support where we are right now. Maybe Bitcoin rallies all the way up to $25,000, comes back test support, bounces here, and then rallies. Or maybe Bitcoin rejects here and then pulls back tests, and rallies. But the thing is, all of those scenarios give Bitcoin a much higher local high and a much higher local bottom than what we would have seen if we were sitting down here ranging at $16,000. All of those put Bitcoin into a confirmed uptrend with a major degree of bullishness, with a very steep inclination on the uptrending level of support, however it's set, whether it's set right here, whether you have a higher low and you set it like right here, or a higher low and you set it like right here. Now, these two are much less sustainable than this uptrend because they're steeper, but whatever the case may be, Bitcoin has the ability to set some market structure. Maybe you even set a trend line like this in motion, and Bitcoin ends up coming back down and testing a level right in here, and then you set this trend line based on these two highs. The point is, wherever Bitcoin corrects to, because make no mistake, there will likely be a correction in the next few days of maybe $1,000 to $2,000 at least. When that happens, that's part of the plan. That's not a bad thing. That's actually a good thing. The market needs to consolidate. We don't want Bitcoin to just take off like a Roman candle and then fall out of the sky like one because it didn't have any support to land on. We want the market to have some kind of structure that is building to lay a foundation for a proper rally. To do that, you're going to need to see Bitcoin have a pullback, set a local bottom where it can build a support uptrend, and then it can follow that into the future in a way that is beneficial and healthy to the market. So that's my overall analysis of Bitcoin. I think you're going to see Bitcoin do something to that effect. One thing I do want to point out is that even as we're talking, Bitcoin is setting new local highs. Here on Bitfinex's chart at 9:25 this morning, we set a high of $21,588. We're currently moving to the upside right now on pretty much all of these charts. You can see right here, Bitcoin rallied up to $21,600 just about on all the exchanges, dropped quite substantially over the period of 20 minutes. Now it's rallying again. There's a lot of volatility. And that's one of the things I want to talk about, is that volatility. Let's talk about the volatility. By the way, thank you so very much for tuning in. We've got 450 people watching live. Make sure to go ahead and smash that like button if you haven't already. Really appreciate all of you for being here. Let's get those likes into a bull market as well, because I think this is going to be a great year for the channel, for you, and for crypto. Although I do think it'll be a bit of a, I think the bull's kind of mean, though, as I talked about in the video I uploaded on Saturday. Okay, where was I? Right. What I was saying is that Bitcoin's uptrend is highly volatile. There's a major amount of volatility in this uptrend. Bitcoin is very much in a period of time right now where it really needs to establish that market structure, as we talked about. One of the ways that it's going to do that is by rebuilding the order walls. So one of the things that you see happen when you are in a low volatile environment on Bitcoin and crypto is that people just stack up buy and sell orders on both sides of the price, and then the price is locked in and it can't move because there's $100 million worth of Bitcoin being sold, $100 million worth of Bitcoin being bought, and then to move the price more than $50, you have to get through that entire order wall. Well, right now, those walls have been wiped out. How do I know? Well, because the market was able to move $5,000, so they got over the wall. So basically, it's like the Mongols are coming into China and they all spilled over the Great Wall of China, and boom, they're all just running in there. We just jumped the wall, the cell wall. And by jumping the cell wall, wow, were the bulls stronger than we thought they were. They jumped $5,000. That's crazy. You ever seen a deer jump over a 12-foot fence? That's basically what just happened. I grew up across a ranch. I used to watch that happen all the time. It's crazy. That's what the bulls just did. They just jumped over that cell wall like it was nothing, completely eliminated and left it in the past. If you've got the war going on the wrong side of the wall, on the wrong side of the castle wall, and the walls are useless. The walls are back down there at $16,000. Now we're in uncharted territory. We're on open field. So the bulls are able to just rampage and continue moving and continue moving and continue moving. And the bulls realize that if they just keep charging, if they just keep pushing, if they just keep running, then they can run faster than you can build a wall. If you're been at the beach and you're building a sandcastle and the tide's coming in, and so you build a sandcastle and the waves come in that destroys the sandcastle, and you back up and then you build another sandcastle and the waves come in, it destroys the sandcastle, and you just keep doing that. I used to do that when I was a kid. Have you ever done that? Maybe not, but you might understand what I'm saying. The bulls are at tide right now, and the bears keep trying to build this little sandcastle in their way to stop them, and the bulls are just like, nah, we're just going to keep going. The problem is the bulls have got to stop for gas sometime, and if they overextend themselves, then that gives the bears a chance to just slam the door shut on them and put up such a massive wall that they definitely can't get through. And then they have to rebound like they're playing ping pong and they just got knocked off. Like they just bounce. Have you ever seen a ping pong? Like the way it bounces, that's what you're going to see happen if you're not careful. The market's going to shoot up and then it's going to shoot right back down. That's called a V top or a V bottom. That's not what you want to see happen for the bulls. You want to see the bulls able to move to the upside, establish a wall behind them as support. Move to the upside, establish a wall behind them as support. Move to the upside, establish a wall behind them as support. Right now, the bulls are in charge. Nobody's arguing about that. What the question comes down to is who's going to set the wall in the right place, that they will be the ones that determine what the next 2 weeks of the market look like. Are the bears going to be the ones that do it, or are the bulls going to be the ones that do it? Are the bulls going to establish such a firm wall below them that no, we shall not go any lower than $21,000. No, we shall not go any lower than $20,500. No, we shall not go any lower than $20,000, whatever the number is. Or are the bears going to do it and just slam the door shut on them at $21,500, at $21,750, at $22,000? The bulls are going to charge into it really fast. They're going to get annihilated, and then they're going to crash hard because there were not enough buy orders sitting right below them to create that buy wall to support them. That's really the question right now. There's a lot of volatility, but it is going to turn back into trench warfare. There was a breakthrough. It's going to go back into trench warfare where you've got the two sides fighting over no man's land. The question is, who's going to have the luxury of setting up their trench in the right area so that they can box in the other faction? We don't know. But what I can tell you is that pretty much wherever the bulls end up holding the line, whether that be at $17,000, $18,000, $19,000, $20,000, $21,000, or anywhere in between, you are almost certainly going to see that be a lot higher than where Bitcoin started this, which was down at $16,500 not 2 weeks ago. And the reason that's so significant is because it means that Bitcoin is going to lock in some kind of gains. Even if it's not much, it's going to lock in some kind of gains. And this is a major this has a major implication on Bitcoin and cryptocurrency because it means that Bitcoin has managed to go on a massive run, and this is going to give confidence to the bulls. The bulls are going to think, well, we did it once, why can't we do it again? Looks like we're so far away from the bottom that the bottom's in. A lot of people that are very credible are saying that the bottom is in. I don't know if I don't have the tweet up over here, but Plan B has been talking about a lot that the bottom is in. He's not the only person. There's a lot of people saying the bottom was in. Back on November 10th, November, whatever day it was, November 9th, and November 21st, when we hit 15,500, many people are saying that was the bottom, and many people are starting to believe it because we're so high. That's going to turn bears into bulls, and that starts recruiting people to the faction of the bulls. All right. So let's back up a little bit because there's a lot more to cover. Next thing to look at. Over on CoinMarketCap, we're knocking on the door of $1 trillion, and that's really the story here. The price is important, and you're going to find a lot on it, but the real story here is that Bitcoin is trying to get above $1 trillion on CoinMarketCap. Now, TradingView is calculating it at $953 billion. CoinMarketCap is calculating it at $996 billion. Regardless, most people are probably looking at CoinMarketCap because that is the much more consumed version of information that people look for. This is the curated area that people normally go to. And so when they're seeing that the market's knocking on $1 trillion, and they're seeing, as you can see here, an uptrend, we have a low at 967, we have a low at 977, then we have a low at 987, and they see that there's local tops sitting up here at $1 trillion on total market cap, they realize that's an ascending triangle pattern. Boom, we've done our technical analysis before, and we could sit here and tell you all day long, then more likely than not, that will end up leading to a breakout to the upside, especially when you have so many people that are so excited for a bull market. You have so much dry powder on the side. Just scroll down to the next chart below this one, or actually, sorry, go over to market dominance and look at the amount of money sitting in stablecoins. The amount of the market that is sitting in stablecoins right now is still like 15%. Now, it's changed dramatically over the last couple of months because people have taken money out of Tether, for example, and they put it into Bitcoin. I mean, you can see the dry powder being used right here. You've seen the amount of money in Tether, the market dominance in Tether go from 8.34% down to 6.72%. That's for two reasons. Number one, Bitcoin and Ethereum are on a run, and Tether is not. But also, number two, they're putting money out of Tether. They're taking money out of Tether and putting it into Bitcoin. You can see Bitcoin is gaining all the dominance that Tether is losing. That's because people are deploying their capital. Tell me, when was the last time you saw that? You don't see that kind of movement where there's a correlation between a drop in Tether and an increase in Bitcoin until you go back to September, right in this area. And if you'll remember, back in September, everybody thought that that was the bottom, but they definitely did not have anywhere near as much confidence as we do now, because this was 6 months ago. This was four or 5 months ago. Bitcoin had not gone through the contagion of FTX. We had not gone through a drop down to 15.5. Right here, yes, you saw some people deploy some Tether into Bitcoin. This does not hold a candle to this from a fundamental standpoint, from a technical standpoint, from a geopolitical standpoint, from a United States monetary policy standpoint, from the Dixie's correlation standpoint with the fact that the Dixie is crashing right now, from the S&P 500 rallying and potentially about to break resistance standpoint, that market movement here in September has absolutely nothing on the one that we're looking at right now. So when you see Tether being deployed into Bitcoin, and when we see just a couple of percentage points move here, make no mistake, we're looking at tens of billions of dollars in real value. We've seen the market capitalization of Tether drop by, I don't know what the number is. I would reckon about probably $10 billion over just the last few days. So over just the last little while. Actually, I take that back. It hasn't changed much. The market dominance has changed because the people are deploying it and because Bitcoin's going up. But the point is, people are not putting more money into Tether. They're holding off. They're putting their money into Bitcoin instead. That might be the best way to look at it. So the point is, people are putting money out of the stablecoins into Bitcoin. And at least if they're putting money into the market, they're not putting it into stablecoins. They're putting it into the asset because they have interest and they have a belief that the market is actually going to go through that rally. So that's kind of the difference between this rally and the former. The former in September is that people are deploying capital into Bitcoin. People are actually making a movement into Bitcoin. People are actually making a movement into Ethereum. And by the way, let's just not forget Ethereum. We haven't talked about Ethereum much. Ethereum is also breaking bullish out of its long-term symmetrical triangle pattern that has been in for a year. In doing so, Ethereum is giving a lot of confidence to its own bulls that it's going to be able to go through a major rally relatively soon. Whether you draw this trend line on the log chart or on the auto chart, Ethereum is currently breaking out of it. You see it right here. That's a big deal. Ethereum is also very, very close to being able to break above recent local highs if it's able to get up to 1677, which if Bitcoin keeps rallying, it very well could do. Ethereum is looking really well. Again, same thing on the S&P 500. Looking at the SPY, you can see the SPY very likely could break above this downtrending level of resistance relatively soon, especially considering we've got the hope of the rate market getting a lot easier on us relatively soon. Not getting easier on us per se, but with the rates, with the rate hikes slowing down, that gives people a lot more confidence because they think, okay, well, 12 months from now, we'll probably see the rates dropping, which means if I invest now in the lows, when the rates come down, the market will rally, and then I'll get to make money. That's what people are looking at when they're seeing the rates come down. So the S&P 500 is doing very well as well. It very well could break resistance pretty soon, and that would likely lead to a major rally on Bitcoin as well. Because if you don't remember, I'll just chart these markets over each other. BTC over USD. Let's use BTC over USD on the price scale. BTC over USD has pretty much followed the stock market. We've been in a bear market largely because the stock market's been in a bear market. We hit all-time high on the stock market here on pretty much the last day of 2021. Everybody knew there was a war coming in Russia and Ukraine. It was pretty obvious they were building up on the border. It was, and if you knew from a geopolitical standpoint what was going on, you could definitely have seen the writing on the wall here. War started, let's see, February 24th. Started on this day right here. Bull market was pretty much coming to an end. We were entering a bear market in the S&P 500. And that happens sometimes. That's just part of it. We were down 27.96%, just going back to just as recently as October. That corresponded almost perfectly with the bear market in Bitcoin. So if you see Bitcoin going into a bear market, and you see the S&P 500 going into a bear market, and then you also bring the Dixie into the equation, and you look at the fact that Dixie has been going up dramatically, that is the perfect scenario for Bitcoin to be in a bear market. Well, guess what? The S&P 500 looks like it might be breaking bullish soon, and the Dixie is going down. Why do you think Bitcoin's going through a major rally right now? Two of its biggest correlated markets are doing exactly what they need to do in this exact period of time so that you can go into this movement. If you look at just look at the formula here. In the exact same time that Bitcoin has been rallying, in the last 13 days, we've seen a pretty large rally on the stock market. In the last 13 days, we've seen a pretty major drop on the Dixie. And in that time, guess what? Bitcoin also saw a bullish CPI print. So it's rallied 5% in the last 12 days. Why do you think Bitcoin has gone through such a major rally? So now that you've seen that chart, the question comes down to this. Can Bitcoin maintain its momentum? Can Bitcoin go into this rally on its own? Will the stock market go into a rally? Will it break its downtrend? Will the Dixie keep going down? Or, with rates being as high as they are, will we continue to see will we actually instead see a reversal on the Dixie and it'll actually start to bounce as a result of the rates being so high? Will we instead see the stock market reject from that local top and then we see a drop? Will we see the 25 basis point rate hike have the opposite effect of what we're predicting and people will not be excited because, yes, 25% basis point rate hike, we're going to plateau soon. We might have another rally. We might have another 25 basis point rate hike, but probably only one. Or will people think, okay, well, price of money still got more expensive, even if it got more expensive slower? How are people going to respond to the fact that there is a massive amount of money going into Ukraine right now in the form of arms, and people realize that there's going to be a gigantic spring offensive? It is all but confirmed at this point, and we'll get into this a little bit more later. I'm just kind of teasing this right now because we're going to talk about this in a second. Are people going to realize that there's a giant spring and summer counteroffensive going that's going to take place in Russia and Ukraine, because the Ukrainians are about to get 14 Challenger 2 tanks. They're probably about to get over 100 Leopard 2 tanks in the next 2 months, because Germany is almost certainly going to give the right for the ability for all of its purchaser nations who have arms agreements with them to go ahead and send their Leopard 2 tanks, such as the main two are Denmark and Poland right now, to Ukraine, and the fact that Russia has all but confirmed that they have just mobilized 500,000 men, and they've got their entire military-industrial complex spun up, and they're producing a lot of stuff that they throw at the front line. This summer is going to get absolutely nuts for geopolitics. It's going to get absolutely insane for the war over there, and the human suffering is unfortunately only going to get worse. And I hate to be the bearer of bad news on that, but it's terrible. The humanitarian side of this is obviously the worst part, and it almost seems macabre to talk about the way that it's affecting markets, but that's what we're talking about is markets. But obviously, I would much rather the market crash and people not be losing their life, but unfortunately, that's not the way it's working right now. Anyway, we're going to go ahead and read chat, and then we'll talk about the broader context of what's going on in the world, because it is very important. You need to know what's going on in Russia and Ukraine if you are a citizen of Earth, because it affects you. It does. It absolutely does. If you live anywhere in the world, unless you live in like the jungle and you've never met a person before, in which case I don't know how you have internet, then this affects you big time. If you are plugged into the world in any way, shape, or form, if you buy things, if you talk to people, this affects you. And so you need to know what's going on. My point, Bitcoin has a great opportunity right now. In fact, it's got a golden opportunity with CPI looking good, with the The EFFR, the funds rate looking good, with the Dixie being correlated in the way that it needs to be, it's dropping. The S&P 500 being correlated in the way it needs to be, it's rallying. And people deciding we're going to move on from the FTX story, at least to some degree, and being excited about the rally. Bitcoin's in a golden opportunity right now to make the most of this. And we're just going to have to see what it does. We're just going to have to see how it plays out. Whatever happens, I do think that we're in a better position now than we were 2 months ago from a technical standpoint. All right, let's go ahead and read chat. This sounds and feels like a 2021 live stream. All right, let's catch up on chat. There's a bunch of people watching right now. We got 634 people watching. Thank you guys so very much for... No. Am I here? All right. Can you guys hear me? It just told me I was offline. I think we're good. I think we're good. I think we're good. Tell me if something just happened there. I don't know why, but my internet just clicked off for a second. All right, hope you're all good. Colin McDonald said, good morning, Jebb and folks, said Shadrach Frost. What's up, Shadrach? What is up? Good work, Jebb. Thank you. We do need a healthy correction for a healthy movement. We do need a correction for a healthy movement, CBD Study said. Yes, and I will give you an analogy for that I've used for years here in a moment. You guys will hopefully appreciate. Let's see. Bad news all week long. When retracement? Probably soon. Smash the likes. Thank you, Mike. Shout out to Mike Lowry and Matt C for keeping the chat clean. Thank you, guys. Is that an ADA stablecoin joke? DJed, I was joking, but anyway. Oh, yeah, there you go. Everyone sell everything the sheep has spoken. No, that's probably be careful about that. Hey, Jebb, can you start to cover interesting alts like high potential niches? It's like gaming blockchains. I don't really do a lot with the smaller cap altcoins. I like to look at the market as a whole. That's where my specialty is. SBF shorted the market from 69K. No wonder Bitcoin lost all his value. Yeah, SBF had some very interesting investments going on. SBF is out of the game now. Good luck, Bears. Yes, SBF being out of the game is a big, big win for the space in general. Let's see. I have heard some legal concerns in relation to the tether and the liquidity they claim they have, similar to FTX. I think there are some concerns by investors as well, not just dry powder. Yes, that is a major concern, is the fact that there are several other exchanges and cryptocurrencies and whatnot that could end up going the way of FTX. And that's one of the big things right now that we are struggling with, is not knowing what's going to happen next. LMAO, dude, I've been having a lot of glitches in the Matrix lately. What, did you see a black cat? Hey, Jebb, need some help with Bitcoin Academy. How can I get support? Yeah, what's going on? Tell me what's going on there, because I think we tried to fix... we looked at it, and it seemed like everything was good on our end, but you can shoot us an email at support@cryptojebb.com. It might take us a little bit to get back to you because we're still trying to fix a few things over there. One of our vendors that helps us with that is giving us trouble, but we are trying to get that all online. Hi, Jebb. If we get very negative news like this war of Russia and Ukraine, you think we could see another bottom? Yes, no, we absolutely could see another bottom. I think one of the most likely things to send us to another bottom is Bitcoin and cryptocurrency having a major exchange or a stable coin go offline because of a liquidity crunch, a liquidity crisis, like what happened with FTX. Siobhan Golay in chat said, I'm a bit late, but hey, good morning, everyone. Hi, Jebb. Hello. All right, we're going to go ahead and move into the next part of our stream here, and we're going to look at this article here. Ukraine confident UK will send Challenger 2 tanks to help with the war effort. This is a few days ago, but this is just something to kind of base our discussion off of. The fact is, Russia and Ukraine have a war going on, and one of them has the support of about 190 countries. They are Ukraine. The other one is Russia, and Russia has a massive amount of steel, oil, natural gas, and food. So they are able to withstand all of the embargoes that have been put against them, and they're able to still maintain a war effort, even though they have had a huge package of sanctions put on them in the way that the Soviet Union basically never saw. They have been completely slammed from a position of trade, but they're still able to manage to maintain a war effort, because throughout the history of Russia, what Russia has always done, and this is horrible, but it's true, they've thrown bodies at the issue. They've thrown bodies at the problem. They mobilize a couple 100,000 men. They mobilize a couple million men, and they throw them into the front lines with whatever gear they can find. Well, that's pretty much what they're doing now. Russia wanted to tout itself as a technological superpower in the form of night vision goggles and their cool helicopters and their modern T-90M battle tanks and their new weaponry, but it's still Russia. Russia's strategy has always been throw people at the problem and hope winter sides with you. Well, winter, in a way, kind of is siding with them because Russia is the one with a bunch of men, and it's easier for men to move through mud than it is tanks. And one of the advantages that Ukraine has that's got a lot of Western armor and former Soviet armor, even armor that it got from Russia. So it wasn't able to do a whole lot during the winter because the winter was actually warmer than it was supposed to be, meaning that there was a lot of mud, but the Russians are using that. Anyway, so they tend to throw bodies at the problem. Ukraine, on the other hand, does not have the people to do that, nor do they have the horrible intention of just throwing people into the meat grinder as cannon fodder. They don't want to do that. Good. They want to make the most out of every single individual, and they want to minimize human suffering and loss because, good, I mean, wonderful, because they have some moral standard in that stance. The thing is, Ukraine is about to be massively outnumbered, as much as 5-to-1 men-to-men ratio. The reason that they are able to stay in this fight is because of the Western gear that they have. If the West was not supporting Ukraine, Ukraine would have capitulated a long time ago, and they would have been completely run over. That's not to say that the Ukrainians aren't doing a great job. They would not have had the armor to hide behind. They would not have had the guns. They would not have had the ammunition. They would have run out of bullets. They would have run out of food. They would have run out of technical support. They would have run out of logistics. They would have run out of vehicles. They would have run out of raw resources. They would have just completely lost, if not for the West giving them as much support as they have. And whether or not you think the West giving them a bunch of arms is money laundering or whatever you think it is, the fact of the matter is you want Ukraine to win this war, because if they don't, then Russia conquers all of Ukraine, and they're knocking on Romania, they're knocking on Yugoslavia, they're knocking on the Baltics, and they're knocking on Poland's door. You don't want that. You don't want Russia being emboldened, conquering Ukraine, picking up all of this Western gear, and then threatening a land war against Europe, where Europe has been trying to demilitarize for 30 years because the Soviet Union collapsed. NATO would win that war, and Russia would get absolutely stomped, and then Russia's backed into a corner, and the only card they have to play before complete oblivion is nukes, or that Poseidon torpedo they just got online. That's why it's important that the West sends them armor, and that's what they're doing. So a couple of days ago, I think it was the day before yesterday, it may have been yesterday, the United Kingdom went ahead and greenlit the sending of Challenger 2 main battle tanks to Ukraine. They sent one company, which is about 14 tanks, and they also sent, I wasn't able to find it in time for the stream, but they also sent a lot of other gear. They sent, the more than likely, they're sending some CRASSV vehicles, which are basically capture and recovery vehicles for if you have a tank knocked out, then this is basically another tank that will come and retrieve the tank so you can get the tank back so that you don't hand it over to the enemy. They're sending them a huge number of self-propelled guns. So we're talking artillery, 155 millimeter cannons. They're sending them a lot of infantry fighting vehicles, and they're also sending them about 100,000 rounds of artillery ammunition that would be compatible with the artillery that they're sending them, and also with the HIMARS that the United States has sent them. But the United Kingdom is not the only nation that is sending gear to Ukraine. And by the way, I'm going to tie all this back into crypto. I don't think I've made that connection. All of this is going to tie right back into crypto, in case you're wondering. Because I know you came here for crypto and you're like, why is this dude talking about the war? I'm going to tie it all back in. I believe that it's very important that you understand what's going on for your portfolio's sake, and also just for your sake as a human. I think that this is something that you can't ignore in good confidence, because this is going to affect you in one way or the other. It's already affected you in many ways. All the prices going up, a lot of it has to do with this conflict and the supply chain effects that it has had. Okay, so it's not just the United Kingdom that's sending them gear. Poland and Denmark also want to send the Ukrainian army a company of Leopard 2 tanks. The problem is, while there are about 2,000 Leopard 2 tanks in reserves all over Europe, and many of those different nations want to send Leopard 2 main battle tanks to Ukraine, if everybody sent as many tanks as they want to Ukraine, Leopard 2s, they probably have about 100 of them. That's a lot of tanks. These are main battle tanks. These are modern tanks. These are kitted out 70-ton main battle tanks that can really help you punch through that trench warfare that's going on in Donbass and eastern Ukraine. The problem is the Leopard 2 tank is a German vehicle, and the Germans have all of the rights to the exports of that. It's called the export license. They have the right to those tanks, which means that if you have one of those tanks and you want to give it to somebody else, you have to get permission from Germany, or Germany's going to turn around and be mad at you because you broke the rules. That's what you agreed to when you bought the tanks from them. So Germany has been holding back because Germany, ever since World War II, has been trying to demilitarize as much as possible. They've been trying to say, okay, we're not going to be a military power. We're going to be a bunch of pacifists. We're just going to sit here and we're going to work on our civilization. We're going to just build a bunch of stuff and machinery. And we're just going to try and get as far away from World War II and the sins of the past as we possibly can. And so they've been trying to do this whole demilitarization thing over the last 30 to 40 years, especially since 1992 when the Iron Curtain fell and Germany was reunified. And they realized their biggest land-based adversary completely collapsed in on itself. Well, now Russia's back with a vengeance, and they had about a year warning. A year ago, nobody thought, some people thought, not many people thought, especially people that were denying reality in Germany, realized that Russia was about to launch a land offensive not 2,000 miles from their home territory. Those two nations have been in a land offensive in the last 100 years, so that very well could come to a head if they're not careful. They've been trying to just get rid of the military so that they could spend money on social programs and try and play the pacifist. That doesn't work anymore. The vice chancellor of Germany came out a few days ago and said that Germany should not get in the way of other nations sending Leopard 2 main battle tanks to Ukraine, even if Germany themselves doesn't go ahead and do it. Germany probably will go ahead and do it, but I would expect, in fact, I can virtually guarantee you that in the next 3 weeks, you are going to see Germany release the license and allow Poland, Denmark, and a few other nations to send Ukraine these Leopard 2 main battle tanks. And by the end of, let's say, March, you're probably going to see about 100 Western main battle tanks in Ukraine on the ground, already fighting in preparation for that spring offensive and summer conflict that the Russians are likely to try and launch. That's a really big deal because that means that Ukraine has a fighting chance. Without Western armor, they don't. They lose this war. So that's where that comes in. It's very important for you because if Ukraine falls, first of all, any kind of contribution Ukraine was making to the global economy that is still going on, it's gone, which they're not going to be able to contribute much of anything because one of the biggest things they contributed was food. The only reason they were still able to contribute food last year was because they had planted all that food right before the war started, so they were harvesting what was already planted, but they don't have the resources to plant this year, so their food exports are going to go down even more. But also, if Russia conquers Ukraine, they go completely offline for several years because they destroyed everything in the process. And you also have an emboldened Russia, and then you have the entire world having even stronger supply chain issues. Here's the point. If Ukraine is able to put up a fighting chance and they don't lose territory to Russia and it's a stalemate or Ukraine's pushing the advantage in the right direction, this sounds so horrible because this is not the most important thing. The most important thing is limiting human suffering, but it does lead to a rally in the stock market. And the reason it does is because people are watching very closely right now to see what happens. Is Russia going to run over Ukraine and start pushing towards Poland? If so, stock market crashes because everybody's expecting World War III. And that would be a very real possibility if that happened. But if Ukraine is able to hold them back for longer and Ukraine is able to look like they have enough armor to push the offensive, stock market could rally. You may end up seeing Bitcoin doing very well. You may end up seeing a lot of things being more conducive to the rallying of Bitcoin. So that's where that comes in. How this war goes has a huge impact on geopolitics, obviously, but it also has a huge impact on the markets. It has a huge impact on the price of oil. It has a huge impact on the price of food. It has a huge impact on the price of tech. It has a huge impact on the price of steel. All of these are major parts of the economies of Russia and Ukraine, both before the conflict started. Russia was the largest oil exporter and the second largest natural gas exporter. I may have those backwards, but they were number one and number two of both of those exports, not production exports. The United States is the largest producer. They were massive exporters of surplus food, especially wheat. That's offline now. Ukraine's trying to get some of it back online, but they got a war to fight. They can't grow in all that food that they were doing before. This has a huge impact on taxes. You know, the money that is being sent to Ukraine's got to come from somewhere. Now, most of the money is surplus that was already slotted for disposal anyway, so really Ukraine's doing us a favor because we had to get rid of this stuff anyway. But this is not something that is going to just end tomorrow, unfortunately. I definitely see this getting worse before it gets better, and that's very, very sad. All right. Let's go ahead and read chat. Donbass, Donetsk. Yes, exactly. All right. Oh, we have a super chat. Ben's 310 just donated $10. Said thoughts on dividend stocks booming, and where do you see money flow moving as more people look to secure their investments, whether Bitcoin or other assets? That's a great question. So here's the thing. Demographically, the entire world is aging into retirement. Right now, in fact, last quarter 4 of 2022, the median baby boomer in the United States aged into retirement, the retirement age of 65. That means a couple of things. Number one, those people are entering mass retirement, not being in the workforce, not contributing through their 40-hour-a-week work week or whatever to the United States economy. On top of that, when you turn 65, you also start drawing Social Security, which means that Social Security's expenditure is going to go up, and you also start liquidating your stocks and bonds, or you start moving your stocks into stocks that have dividends so that you're able to have passive income so that you're able to continue living through your retirement without dropping your portfolio too much. If you have a large, say, $3 million portfolio, you put that all into dividend yielding stocks, then you can end up living off of those dividends, and you don't have to actually liquidate the stocks and get your portfolio lower and lower and lower throughout the years of your retirement. People are living much longer than they ever have, so people want that. They want to be able to live for 30 years off of their stock market investments. And that's what you're seeing take place right now is many people are liquidating their assets or they're moving into dividend producing stocks so that they can live on that money. Where people are looking to secure their investment, well, people are looking in a lot of places. They're not looking first into Bitcoin, though. I'll tell you that. Most people are not looking at Bitcoin right now. Bitcoin's a sleeper asset at the moment. Everybody who was here left. They're gone. They left. Now they're going to come back, I believe, but for right now, they're not looking at Bitcoin. They're looking at real estate. If you're an investor and you're able to buy real estate without having to get a loan, because the loans are stupid expensive right now, but if you're able to buy real estate without a loan, then you can get a house outright for cheap because the market's down 10%, 10, 15%. Expect it to rally much more in the next 8 years because of inflation and because these rates will come down eventually. And the rental market is more expensive than ever. So if you're able to buy a house, rents up, prices of home is down. If you're able to buy a house outright, not necessarily with a mortgage, but if you're an investor and you can buy a house outright, that's where you're going to put your money. That's where you're going to do it. So that's one place. People are also looking to putting their money into T-bills and into Bitcoin, not into Bitcoin, into cash. People are liquidating their stocks. That's one of the things that we're seeing happen right now is that we saw a recession because of a massive amount of money printing because of the Russian-Ukrainian conflict. But another reason the stock market's going down is because people are selling their stocks back into cash to use it because they are entering retirement. The stock market is going to have a much more difficult time going through this just gigantic boom that had been going through for the last 20 years nowadays because there's not as much money still in the stock market. You're not going to see necessarily this just meteoric rally of 600% in 15 years. You're more than likely going to see something more like what we saw in the 2000s, where the market was largely moving sideways. You were able to make money, but it wasn't just this up and to the right forever kind of nonsense that we've been doing right now. And that makes sense. If you look back in the history of the DJI, the Dow Jones Industrial Average was not just moving up forever. In fact, the DJI for many years moved sideways here. And by many years, I'm talking about 2 decades. This is 20 years right here. The DJI pretty much just moved completely sideways. You put your money in the stock market to preserve it, not just to grow it. If you look back to the 1920s and 1930s, the market was gradually moving up from 1900 to 1948, 1950. But really, there was a lot of volatility in here. We were not just seeing this continual upward and to the right movement that we see nowadays. It's not really how it worked. So we're probably going to see a reversion to the mean where we're not just seeing one gigantic bull market, but you're seeing actual market cycles where you're seeing boom, bust, boom, bust, boom, bust over 5-year periods or so. We may end up seeing something like what we saw back here in the 60s and the 70s, where you did see a lot more tension, a lot more risk of global nuclear annihilation like we could be seeing relatively soon if Russia keeps saber rattling with the Poseidon torpedo and everything. You could go back into this territory where you have a lot of inflation. We were looking at insanely high rates back here in the 60s and 70s. You were looking at rates that were sometimes reaching up to 18%. You were seeing inflation that was very high. You were seeing oil crises. Many of the same things that you're seeing right now on the geopolitical, supply chain, and global financial market stage, you were seeing the same things happen in the 60s and the 70s. That could end up being the kind of market that we're looking at on the stock market relatively soon. So a lot of people are taking money out of stocks right now, and that's causing the stock market to have a harder time just going up and to the right forever like it was doing before. The fact is, you have to build the stock market on a solid demographical basis. To build our current economy, you need to have a massive amount of people that are working, producing, consuming, and investing. The people that are investing, well, they're retiring, so now they're turning around from being major investors, because normally people are gigantic investors in their last decade of work. From 55 to 65, people are investing a ton of money because the kids are out of the house is paid off, and they're able to and their income's the highest that it's ever been, and so they're able to invest a lot of money. Well, 10, 15 years later comes around, and then they're ready to liquidate that. They're ready to sell that money back into the stock market. 10 years ago, the boomers, the largest generation in human history, in United States history, they were in that 55 to 65 category. So they were doing investment. Now they're moving into retirement, which means they're flipping on their head. And instead of putting all of the money that they were making into retirement, one, they're not contributing to the economy anymore because they're not working. Fair enough, people retire. And two, instead of investing, which is net increasing the value of the stock market, net putting money into the stock market, now they're taking money out of the stock market. So you're basically having the biggest bull in the history of mankind ever turn into one of the biggest sell side, not necessarily bears, but one of the biggest sell pressure sources that we've ever seen on the U.S. stock market. That's a very difficult thing. That's a very difficult environment for the Bitcoin market, for the stock market to grow in. That's my 2 cents, my two stocks. Right. You said if I was visibly showing the charts, they're not visible. I do apologize. Let me pull up the DJI. I'll show you what I was talking about. I believe you were talking about the DJI, that being the Dow Jones Industrial Average. The DJI, as you can see here, what I was saying is that what we're probably going to see in the 2020s is probably going to look a lot more like what we saw in the 60s and 70s, where you saw a massive amount of movement sideways. And you're probably not just going to see this perfectly up and to the right movement forever, like you saw from the bottom of 08 to the top of 2021. Standard of living is more or less peaked. And the reason I say that is because supply chains around the world are completely broken right now. They're completely shattered. The world has a lot of adjustment that it needs to go through. And I think Bitcoin has an opportunity to either do kind of well or to completely thrive in this new era. We'll have to see how it works. All right. I think it's getting less likely for a deeper, long recession. Yeah, I'm not necessarily saying a recession. I'm more saying that the market's just not going to rally anywhere near as fast as it was. Retirement, not in the Bible. Retirement is a rudiment of this world used to give men the impression that they're useless after a certain age. Yeah, I mean, you're not useless after a certain age. For sure. Let's see. What about our homeless vets begging for money on the streets, and the streets filled with homelessness in Democrat-run states? We shouldn't be funding Ukraine, IMO. Every country's economies are teetering. Every country's economies are teetering. That's a political question for you guys to answer as voters. I'm going to leave that between you and your ballot. What I will say is that the Ukraine issue is a very real issue, and homelessness is a very real issue. And the way to carefully balance the inputs that go into fixing both of those problems, I don't claim to have all of that figured out. I definitely don't. Careful, Joe, about getting into political debate going on in chat. I think I sidestepped that one pretty well. Let me know. Jebb, what are your chances? What are your chances we could see a huge recession in 2023 to 2024? The thing is, I don't know if we're going to see a giant recession because we've already recessed. What I'm really saying is it feels like we're going to stay down here in a slump for a long time because the supply chain is so broken. I'm not calling it a depression exactly, but what I'm saying is that I just don't. We're not going back to normal. What you saw as normal towards the end of the 2010s, that's gone. That's over. 2019, the way that the world worked back then, it's done. It's completely done. And that's sad, but ultimately that's where Christ comes in, because the fact of the matter is, whatever my standard of living is, whatever our family standard of living is, we have a holy God who loves us, and He gives us all things for life and God. He gives us all things pertaining to life and godliness. Those mainly being spiritual things. That doesn't mean that you're always going to have food. That doesn't mean that you're always going to have a roof over your head. But we have everything that we need for life and godliness when we're in His will and when we're where He wants us to be. I'm not that worried about standard of living, quite frankly. I like the nice things that we have. Those nice things that we have are going to get more expensive. That's a fact at this point. That's unavoidable. The nice things are going to get more expensive. This hat is probably going to cost twice what it costs right now in 3 years because leather's a commodity that will probably get more expensive. Now, it'll probably get more expensive a lot slower than many other things. We're also in the United States, so things won't be as bad. But things are going to get a lot more expensive. The supply chain's broken. I mean, the supply chain is completely shattered in a way that it has not been ever in the history of humanity. We've never seen the supply chain this complicated and then this quickly get completely destroyed, other than maybe the Bronze Age collapse. I'm not saying this is going to be as bad as the Bronze Age collapse. We're not just going to see civilization blow up. But what I am saying is that things are not going back to normal for at least 10 to 15, 20 years. The era of globalization 1.0 has come to an end. And that had been coming for several years, but I would say if you wanted to mark the official end of it, it was February 24th of last year, the day that Russia launched that invasion, that horrible, horrible invasion. Jebb, I saw a report with regards to Singapore and Hong Kong have regulated some projects and aim to be the largest crypto country. Thoughts? Not surprising at all. Hong Kong and Singapore are two city-states. We'll address this and then we'll talk, and then we'll go ahead and wrap it out. Hong Kong and Singapore are two city-states in the Chinese sphere of influence. Both of them are Singapore not so much. Both of them are more Western, I should say, than what you would see in China, and both of them are extremely rich. Neither one of them have really any raw resources, natural resources. Both of them rely heavily on tourism. Both of them are very financial city-states. It makes absolute sense that they would try and get into crypto because crypto is one of the next big things in finance, especially and mainly Bitcoin. It makes total sense that Singapore and Hong Kong would want something to do with that because that's another way that they can make more money. It's right in line with what they're doing, and also it gives them a little bit more stability over their currencies if some of their investment is taking place in Bitcoin, because Bitcoin is not going to be as heavily impacted by what China, their neighbor, is doing. Now, Singapore's a little further away from China. It's still in the Chinese sphere of influence. Hong Kong is actively being what's the word? What do the Borg do? They assimilated. Is actively being assimilated into China right now, and they're basically losing their democracy because China made a promise, broke it, and now they're trying to gobble it back up because there's a lot of money there. I think that there is a very high likelihood that both of them could make large investments in Bitcoin in the next few years. Anyway, I got to go ahead and wrap it up. I really appreciate all of you guys for tuning in. Thank you guys so very much for being here. If you have not already, make sure to hit that subscribe button, hit that post notification bell so you won't miss a beat, and hit that like button so that you can help to support the channel. I really appreciate when you guys do that. Let's see if we can get to 400 likes. Make sure to go and follow us on our Twitter. You can find the link for that down below, and sign up for Lux Algo. If you didn't see what we talked about earlier, make sure that you use Lux Algo. It is so incredible. You can find the link down below. Use coupon code Jebb, Jebb, for 20% off at checkout. Jebb, can you give your best advice on how to stop procrastination? Well, sometimes you just got to jump right into it and dive right into it and just rip the Band-Aid off. Sometimes getting started on something is very hard, so you just got to do it. You can't let yourself think about it. You just got to do it. And then after you've been doing it for about a minute, then the difficulty will fade away because you've already started. That's the best way to do it. It's not as easy as it sounds, but in a way, if you commit, it is as easy as it sounds. That's all I got time for today. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.